I figured out the simplest scalping strategy that transforms losing traders into profitable ones. And not only has it worked for me, but it has also helped dozens of struggling traders finally achieve profits month after month. Unlike complicated systems that fail in real market conditions, this approach uses support and resistance on the 5-minute time frame. I have compiled 4 live trading videos that I took with my community, so by the end of this video you will know exactly how to execute this strategy profitably every single month. Pay special attention to the second live trade because this is what 95% of traders miss out on and destroy their account. This is the same framework that took me from blowing accounts to making between $5,000 and $10,000 a month consistently, even in choppy market conditions. So without wasting any more time, let's get right into it. Okay, so if you guys watched my last video, you'll know exactly how I mark out my chart and what I look for. So over here, we are busy trading the CME Open. So that is exactly 30 minutes after New York Open. So what I usually do is I identify the above and below of my current range right before the CME Open. So over here, you can see I got a resistance that formed. I also got these lows. So this is a support that formed, but if I pull it over, you can see there's a wick sticking out over here. What I do is I like to cover these wicks over there, so this becomes a nice key level. So since it's before the CME Open, what I do is I'll then use this as a breakout to the upside because we are above the 50 moving average. So over here we have a low that's sticking out. We could use this as a support, so we pull this over to the left, and you can see over here as well we have a high sticking out. So all I'll do is I'll cover that high, so then this also becomes a nice little key level. Down here we also have a support that formed, so we can just mark this out so that we know that there is a support. So if price has to sell and we take a trade to the downside, we know that there's a support level over here, so we have to be careful, right? So what we're gonna do now is I will show you guys the live stream that I took with my community and exactly how this exact trade played out right in front of you. Okay, so over here you guys can already see price has broken out. It made a rejection, and since it was a valid break, the body of the candle is outside. When price started coming back down into our support level, so previous resistance, it now becomes a support, we can now take the trade. Price is already inside the zone, so all we're looking for is price to slow down a little bit. You know, you don't want to catch a falling knife. So as soon as price starts slowing down, we can execute this trade, and we just got to hold for a 1 to 2 risk to reward. So let's play the trade. You guys can see now price has rejected nicely inside the zone. It's starting to move up, so this means that price has respected the support level. It's slowly pushing up. I put down a tool to show where the 50% is, so how I control the risk management in this trade. Once I'm in a position and price moves to 1 to 1, so I only target a 1 to 2 risk to reward. As soon as price moves to the line over here, which is my 1 to 1 line, I will then move my stop loss to break even, and we'll hold the trade until price hits the full 1 to 2 risk to reward. So let's wait and see when price hits that 1 to 1 line. Okay, so there we go. Price now hit the 1 to 1 risk to reward. So now we're moving all of our stop losses to break even. So our stop losses should be over here. We will now keep holding this trade. We want the full 1 to 2 risk reward, and you can see that our TPs are not even inside the next resistance, so that is a good sign for us. We'll be able to hit TP before price touches the next resistance, which is ideal for us. You can also see down here that we were above the 50 moving average. Price formed a little bit of a fair value gap, so that doesn't really concern me since we're already in this trade. If there was a fair value gap right before the entry, and that could maybe lead to price coming down a little bit lower, we'll wait for price to come and fill that fair value gap first before we execute this trade. there we go, price just hit TP for us. So this was a good trade. It was nice and quick. You can see this was like 1 5-minute candle, so we weren't even in this position for a long time. Price already hit our TP, so we are out of this trade. This was a really good trade, and we can hop to the next example right away. Okay, so now you guys should be understanding more or less what I'm looking at, right? So again, we're on a blank picture, okay? Nothing on my chart. So what we do is we look for the high and the low of the range, okay? So what I see over here is we got all these lows that are together. So we have these lows, we have these lows, those lows, and these lows, okay? So which one am I actually going to take? Which one is more significant to me? So if I mark out these, you can see these ones are touching as well, but there is also these lows right below it. This is a good support level. You can see how price kind of stalled out inside here. So if we want to take this level as a support, then you don't want to be trading this one, because what's going to happen is you are going to trade the break, retest, and you are going to trade directly into another zone. So that is going to be a huge mess. You don't want to be in a trade like that, because what will happen is you get into a trade, it bounces on the zone right below that, and then it just blasts straight through your stop loss. So now that we have this low, we want to see if there's any more support and resistance, right? I see this wick over here. If you draw it from this previous resistance, pull it across, you can see that these wicks are sticking out. So you can take the bottom of your resistance, you can put it on these wicks over here, and then that becomes a support level. So it was a previous resistance, it broke out, retested again, so now it's a confirmed support. So if price were to sell down, I would definitely be taking a short off of this support, because if price is to move all the way down, we'll be beneath the 50 moving average. So now it's valid to take sells. If you guys go back to my first video, you'll understand what I mean by the 50 moving average. And right here on top, there's nothing else over here, right? These are all pivot points. The market made a low over here, it made another low over there. That is not support for me. These are just pivots. The market just makes a high, makes a low, makes a high, makes a low. So not every high and low is going to be support and resistance. Over here you can see price pushed up, it started stalling out, right? Price is stalling over here. So if price stalls out, that is where I draw my support and resistance. So over here we have our resistance, this is our high. So if I were to look at the chart like this, we are above the 50 moving average. We also have a resistance. So if price breaks and retests this is a perfect opportunity for me to go long, as following my confluences. Again, if price were to sell and break below this, we'll be below the 50 moving average. So that means we're not trending to the upside anymore. Price is now going below the 50 moving average. So now it looks like the 5-minute will start being bearish, and then I would start getting into sell positions. So let's hop over to the live trade example, and I'll show you guys exactly how this analysis played out. Right, so over here you can see price was already breaking out. We're just waiting for the candle closure. So once again, the candle that breaks out has to have a candle body closure. If the candle's body closes inside the zone and there was just a wick that pushed outside, then that is not a confirmed breakout. It's only a confirmed breakout if the body of the candle closes outside that zone. Okay, so there we go. That is a confirmed breakout. The candle has now closed outside of our resistance. So all we got to do now is wait for the next candle to come back into our zone. And once that candle comes back into our zone and shows a little bit of a rejection, we can now hop in the trade. We can get in long. And once again, we hold for a 1-to-2 risk to reward ratio. We go break even at 1-to-1. Okay, there we go. So now price is inside our previous resistance, which is now our support. So price rejected, we can now enter our trade. We can now go long. There we go. You can see I moved the tool again. This is where we entered the trade. So what we're going to do is we just mark up our 1-to-1 line. So the 50% of this. So since it's a 1-to-2 risk to reward, we mark out the 50%. So there we go. Price is now pushed to 1-to-1, so it's past the halfway mark, so we can move our stops at break even. So that shows you that we can now go completely risk free from this trade. We no longer have any risk on the table. If price has to come back to our entry, we won't lose anything, we don't gain anything. Let's see how the rest of the trade plays out. Yeah, so there we go. Price is almost at our TP. Once again, this was a really fast trade. We 3 minutes in, price is about to hit my TP. There we go, we're out of this trade as well. 3-minute trade, it's really quick. Sometimes there's really quick breakouts, sometimes price actually takes a little bit longer. Not all of your trades are going to be this quick. So once again, good trade. I'll hop on to the next example for you guys. Okay, so we're 5 minutes before the CME open, so now we can start marking out our zones. The reason why we trade CME open, once again, it's because that's the time that NASDAQ is most volatile, and that's the perfect time for breakouts, right? So we're gonna look for the highest wick above and below the current range. So you can also see that the 50 moving average is not really trending right now. There's no actual trend. Price is breaking above, breaking below, breaking above, breaking below, breaking above. So there's no actual trend. We're trading a consolidating market. So our job right now is to find the support and resistance above and below the range. We can clearly see over here, there's some nice wicks. We can pull this across. That is a good support level. Price has already respected it 3 times. So we can move that over. We also have our resistance up here, so now we got to find any inside levels. So over here you can see this wick over here, and this wick over here. That is a good support level, and I would be comfortable taking this. The only thing is the moving average is not trending. So because of the moving average not trending, there's no actual direction for the day. So what I would do is I would actually go half risk in all my trades when we're not in a trending market. So when the market's consolidating, drop your risk. Maybe you would usually risk 1%. But if you're not in a trending market, but there's still a confluence, there's still a valid setup, I would just drop my risk to half of what I usually risk. So if I'm risking 1%, I would risk 0.5% of my account. So with that being said, let's see how the live trade played out. Okay, so CME candle just started. Right, you can see already the volume that is coming in. This is why I love trading CME open. Like, the volume comes into the market, candle starts moving much quicker, you get faster breakouts. It either gives you that breakout right away, or volume pushes up, the candle rejects, leaves a big wick, and starts going already in the opposite direction. It will already give you the direction that the market wants to go. That's why I like to trade the CME open. And also this means that I don't need to sit in front of my charts the whole day. So usually I wait about an hour, and the market will either give me that breakout or it will just keep consolidating. So after sitting in front of my chart for 1 hour only, I will either know if I'm going to have a trade or not. So many other strategies I tried trading before, I would sit in front of my chart for 4 or 5 hours. You know, I don't want to sit in front of my chart the whole day. I want to trade and I want to walk away. That also builds good habits. So it also leads to you not over trading anymore. A lot of people sit in front of their charts for 4 or 5 hours, and you start drawing up things that is not necessarily there. With this system, you trade 1 hour, you either get your win, you get your loss, you put your charts off, and then you just come back tomorrow. So over here you can see I'm still waiting for the breakout. Okay, so you guys can see over here that CME open ended up rejecting to the downside. It left a big bearish candle. So now it's telling us that price is most likely going to continue going down for a little while. So let's just see how this trade plays out. Okay, price is now inside the bottom support level. So there I was getting ready to go short. 25 pip stop loss. We still got 3 minutes on that candle. I'm marking out a fair value gap. So what I was doing over here, I was already telling everyone that this trade is a little bit more sketchy because it's leaving a fair value gap over there. So a fair value gap right above your entry already tells you that you should be going lower risk, because I'm not gonna not take the trade just because it's a fair value gap. I'm still gonna take the trade because the fair value gap doesn't affect my trade, but it is a confluence. So if there's a fair value gap, I'll drop my risk. So since I'm already dropping my risk because the moving average is not really trending, then I'll be going with that 0.5% risk that I spoke about in the start. Okay, so there you can see price is now breaking out. That body is way outside the zone. Price is pretty overextended right now. So that is another confluence going against us. By overextended, I mean price is running pretty far away from the 50 moving average. So now that price is overextended, we have a fair value gap. And we also have the moving average that's not really trending at all, slowly going to the upside. But since price pushed down so far, it's gonna work like a rubber band. Like most of the time when price is overextended from the 50 moving average, it can snap back really quick. So what I was telling my community is we would take this trade with much lower risk, because we know that there's two factors already going against us. So you can see over there, we were now in the trade. We were a little bit in profit. Price is starting to jump around. It's sitting at our entry right now. Okay, so there you can see price is now reaching up to that fair value gap. Exactly what I said. We went with much lower risk because we already identified the fair value gap. So if this trade wouldn't work out because of the negative confluences against us, we at least not losing that much. But just because there's a fair value gap, it's not that you don't want to take the trade, because if you don't take the trade and it still doesn't go all the way up to the fair value gap, it actually rejects perfectly inside of your zone and the trade plays out. You're missing out on a trade because you let the negative confluence scare you out of your position. So we took this trade. We're a little bit in drawdown over here. And still reaching up, reaching towards that fair value gap. Pointed it out over there. There we go. Price just blasted straight through our stop loss, reaching up towards that fair value gap. So losses do happen, but I really wanted to show you guys this trade and why I use these negative confluences and how that helps me determine when I should be dropping my risk. So when we have all our confluences going along with our trade setup, then we usually go full risk. But when we have trades like this, we can already identify that we have to drop our risk, and that helps us keep our risk management in check and we maximize all of our gains. So let's hop on to the next one. Okay, so for the last trade, let's go and do our markup. Firstly, I want to break this down. You can see that we were clearly bearish. This moving average was moving down pretty well. Price was in a nice downward trend. But you guys can see over here, price broke above the 50 moving average and now it's consolidating. So it's getting ready to make a new move. It could be breaking these highs to the upside, or the newly formed lows over here, or even these lows. Price could be breaking back to the downside after a little bit of a consolidation. So first thing we got to do is identify our levels, which is our support and resistance zones. We can see over here we have a resistance pulling this across. We can have it accurate to that high. We can take this box and you can pull this over to this area. There's a little resistance here too, so marking out that resistance, I can have it accurate to this wick. There's a little wick over there, and we can pull this zone across, right? So there's no more obstacles above this. All we have here is fair value gaps, and we also have a pivot point. This is a pivot point, it's not resistance. Okay, so that is the only obstacle that I got for that trade. So I wouldn't want to be taking this zone over here, because trading a breakout of this zone into another zone, price could reject this one and go straight through our stop loss. So I would preferably take this zone as much more safer for me. There's also resistance all the way up there, so we can draw another box on these highs and we can pull that one over as well. Looking beneath the 50 moving average, we also have a support level that started forming over here, and we have another support level all the way here at the bottom. So we got 4 levels already. So this zone in the middle, I can pull it over. You can see it was a support there too. But now this high is sticking out. So all I'll do is I'll move the top of my box to that previous high. So now it's a beautiful key level. You can see our price respected it as a support, broke through, retested as a resistance, broke again above, became a support, and our price is sitting in the middle of the range once again. So this would be the 4 levels that I would take over and over and over. I like them. They're all in a perfect spot. So this one over here gives us a little bit more room in order to take the trade. It is exactly 31 pips, so I'll be at break even by the time it hits the zone. So I'm happy with taking that, as long as my trade is break even by the time it hits the next zone. If I take a breakout from this zone all the way up here, it is exactly 60 pips to the next zone. So that gives me way more than enough room to actually go and hit my full take profit. So I'll be out at TP by the time it hits the next resistance. So with that being said, let's check how the live trade actually played out. Okay, so now we can see the CME candle is live. We are now in the trade as well. Price broke above our resistance. We do have a fair value gap below our entry, but this is not going to be a negative confluence because that fair value gap is so far away from my zone that if price has to reach all the way down to that fair value gap, it's going to invalidate the trade anyway. So then it's no longer going to be a breakout because price will be breaking back into the range. So you can see over here, price has rejected the fair value gap to the far left. It's still in profit. Price is moving up closer to our 1-to-1 line, and by now you guys know when price reaches 1-to-1 we go break even on our trade. We're trading with a 25 pip stop loss, so that means we got a 50 pip TP. It's always a 1-to-2 risk to reward ratio. There we go, price already hit our 1-to-1 level, so this means all of our stop losses are now at break even. We have no risk on the table. If price had to come back, we're not gonna make any money, we're not gonna lose any money. It was a good trade, right? Price just continued blasting up over here. It's reaching closer to our take profit level, and again our take profit level is right on the next resistance. So if price breaks from your previous resistance and goes all the way up to the next resistance, you are out of the trade. This is a perfect setup. This is an A+ setup. I would take this any day of the week. Okay, so there we go. Price is right by our TP. Just waiting for TP to hit. And there we go. We're out of the trade. This was a really good trade. Alright, so that's it for me. If you guys enjoyed this video, you can leave a comment down below. I love hearing from you. And if you want to learn more of my system, you can go and check my last video. I basically break down the entire system. I talk about everything of how I draw my zones to where I actually enter the trades. And if you want to join my live trading community where I live stream every single day for free as well, the link is in the description below. Well, I hope you guys have a wonderful day further, and I'll see you guys in my next video.